Hi, Gidget with the Graham team. It's that exciting time of the year again, where we bring you the latest insights into the exciting world of real estate. Our team has been attending a lot of conferences, studying analytical data, looking at latest trends to make sure we provide you with the most accurate information so you can make a well-informed decision as to when is the right time for you to buy or sell your home. So buckle up, we're going to look into some compelling facts I think you'll find interesting. So we surveyed 10,000 future homeowners from our database and asked them this question: what is keeping you from homeownership? And the results are in. The number one factor keeping home buyers from purchasing homes right now is interest rate. It far outweighed other concerns and factors that we would normally see, such as home prices, down payment requirements, income ratios, and even inventory. The reality is, interest rates play a significant influence on a buyer's purchasing decisions right now, and many potential buyers are cautious and just waiting. You might be wondering and asking this question: if home buyer demand is softening, then why have we not seen home prices start to decline? And actually, they started to rise over the last few months. Well, this answer is simple, but is also multifaceted. Many of the future home buyers in today's market are also sellers, meaning they have to sell their home in order to purchase a new one. They are locked in or handicapped into those interest rates they acquired a few months ago, so they are also equally concerned with what's happening with interest rates. So the magic question is, what happens if interest rates stay in the 7% range for the upcoming months or even go higher? Sellers are holding off and making those big life decision moves based upon the hope that interest rates are going to get below that 6% mark. But life happens and it continues to go on. Babies come, job transfers happen, grandparents want to get closer to those grandkids before they get too old to participate in those special moments. So, how long can sellers hold off those life changing events in the hopes that interest rates will get to where they want to be? Again, people can only afford what they can afford, though. Before we address the big elephant in the room on interest rates, let's take a look at the Southern Nevada housing data and just kind of see where we've been so far this year. As you can see, we are all trending green. The median sales price is up, median home size is up, the number of homes being sold is up, and the sales price to list price is up. We'll talk about inventory in a minute here. So over second quarter over first quarter, you can see our median sales price rose to 440, and as of July, we were at $450,000. That's a year-to-date increase of about 5.88%. If you compare over second quarter of 2022, in July of 2022, that's when home prices started to decline from the all-time high in June. So we are year over year at about 3.4% below where we were in second quarter. Let's talk about those inventory numbers, though. As you can see, when we were having that buyer frenzy last year, we had multiple offers, and it was just a very competitive environment. We were at like 2.5 weeks worth of inventory. Today, we're about 1.4 months of inventory, and a healthy market, we really want to see that about 2 to 3. We always see it's healthy to look at a 5-year analysis of where the housing market is. So on this graph, you can see where we are at. So home prices are doing very well. We're real close to where that record high of last year is. But what is declining, you can see that sharp decline on that orange line, is the number of transactions that are occurring. And we are almost down to those record low levels that we saw during the pandemic in 2020. So as we spoke about, this is because buyers are sidelining and we have a low amount of inventory because sellers are handicapped by those low mortgage rates on their existing homes, so they cannot sell. So let's go ahead and address that big elephant in the room and get back to interest rates. So getting back to that big question is whether or not interest rates in the upcoming months and through the rest of this year are going to drop below that stubborn 7 to 7.25% interest rate that we've been experiencing. Our team recently attended a conference where a lot of economic experts were speaking and they were giving their forecasts. And here's a summary of some of those experts' predictions for the rest of this year. Now, these are national numbers, and Southern Nevada runs slightly higher than the national average. So if they are quoting 6.75, we're closer to 7% or 7.125%. So as you can see in this graph, they're predicting through the rest of this year that we're going to stay close to that 7% range here in Southern Nevada. So what are these economists predicting going into a few years out, 2024 through 2026? Well, they all seem to be on the same page and pretty consistent, feeling that the Federal Reserve has going to stop their rate increases and stop that probably this year. They believe that inflation has stabilized, which is the primary reason the Federal Reserve was raising rates. And so they actually anticipate to see the Federal Reserve decrease rates sometime late into 2024 into 2025. So based upon those assumptions that you can see, they are predicting interest rates or mortgage rates to drop in 2024, somewhere in the 5% range towards the end of the year. And then going into 25 and 26, actually going to be maybe dipping below 5%. So these are their predictions. There were a couple of outliners that were expecting interest rates to go over 8%, but they were definitely in the minority. So with the economists predicting that interest rates are going to drop in 2024, what is the next elephant in the room? Median home sales prices. What are hesitant buyers, prospective sellers, and inquisitive investors asking? What is the forecast for the median sales price here in Southern Nevada? With the mortgage rates anticipated to drop, and we have a whole lot of buyers who've been sitting back and holding back to be talked about. Where are those buyers at right now? Well, they're living in apartments, they have multifamily generations living in the same household. What we are experiencing throughout the entire United States is actually a pretty large housing deficit, meaning we don't have enough supply and the home builders aren't able to keep up. So, what's going to happen when all of those mortgage rates hit the market? I do anticipate that we're going to see a big push of buyers hit the market pretty close at the same time. So, what is that going to do? I think we're going to see a multi offer position again. Prices are going to rise again at that point in time, but then we'll see it stabilize. And so, we'll look at the predictions of what we're expecting over the next couple of years in regards to the median sales price. So as you can see on this graph, the leading economists in regards to median home sales price predictions through 2023 through 2026 look like 2023 to be relatively flat for most economists, meaning in the 1% to 2% range, and then going into 2024 and through 2026, going back to that normal appreciation range of 3% to 4%. However, they have not taken into account, I don't believe, the increase that we're going to see for those couple of months when the market all gets hit by those buyers that have been waiting at the same time. Then again, it will stabilize. Taking a prediction jump all the way out to 2030, as you can see on this prediction, Runovis is projecting that we could see the median sales price in Southern Nevada, based upon historical data for the last 10, 20 years, reach $621,000. Wow, that's an astonishing number. So that relationship between supply, demand, and mortgage rates in the housing market is pretty intricate. With mortgage rates staying stubbornly at 7%, homebuyers again have cautiously held back. But when they dropped down to 6%, like we saw again in March and April of this year, home buyers did come into the market and we were seeing multiple offers at that time. So one of the factors that we track is mortgage applications. It provides us a pretty good indication of what's going to happen in the housing market in the next 60 days. According to Renfin, the other thing that's going to impact our market is the amount of buyers looking to come into Las Vegas. An article that was published by Redfin earlier this month showed that 26% of the buyers looking to move outside of their current metro market, and the number one place they're looking to move are searching online is Las Vegas. So one of the core factors affecting the housing market is affordability. The disparity between the median sales price and the median household income and what it takes to qualify for that median home sales price is quite significantly different. As you can see in the graph before you, we have projected out the median sales price of homes based upon the economist forecast for the next 3 years, and then we based it off of the mortgage rate decreases as predicted. As you can see, of course, at the current market conditions of 7%, that is where the highest income is. But even when we jump down to a mortgage rate at the 4.33%, with the forecasted median home price increasing, we are still at $108,000, which is well above the median household income here for Southern Nevada. Taking a quick look into the rental market for our renters and our investors, we expect the rental price, median rental lease rate, to stay relatively flat. It has slightly increased in second quarter, and the median rate is $2,150 for about an 1,800 and 3,300 square foot home. Again, that prediction stay about $1.15 to $1.20 through the rest of the year, with homes that are newer or have been recently upgraded, giving that little wow appearance, will get a little bit of premium. So what's in store for the remaining of 2023? Again, we think the median home price is going to stay relatively flat. We could see months where it fluctuates $5,000 to $10,000, but it's going to hold very consistently, we feel, with that $450,000 price point. With regards to foreclosures, we think they're not going to be impacting the market. There's just too much equity in today's homes, and that sellers are not going to be losing their homes due to foreclosure. Interest rates, we're going to let the leading economists take the lead on that. They lots and lots of numbers and data. And with their predictions stating that they're going to be relatively consistent through the rest of the year. So we think that we're going to be right around that 7% mark through the remaining of the year. Now, with inventory, we do expect inventory to rise slightly from that 1.4%, and not because we're going to see a lot more homes hit the market. It's just that we are looking at those mortgage applications, and for this last couple of weeks, last 6 weeks, they have been down. So we expect to see September and October to be a little bit slower. So we expect third quarter numbers to be a little bit less production than they were in the second quarter. So, what advice are we giving our buyers? Well, I mean, affordability and interest rate is definitely a challenge. And so, if you're one of those home buyers who are just waiting, you can't afford those homes at that 7% range, use this time wisely. Get prepared. Please reach out to your Graham Team Real Estate Advisor. We are here to help you. We have guided through many home buyers, been able to prepare themselves so when the time is right, they have not only the confidence to make a great purchasing decision, but they have all the tools in their tool bag that allow them to obtain the best mortgage rate, the best terms on their home purchase. So there's little things that can be done while you're waiting that can set you up for success. As our buyers are making those tough decisions as they're waiting to see what happens with interest rates, keep this perspective in mind. If you continue to lease, let's just say for the next 3 years at the median lease rate of 2150, you would have paid your landlord $77,000 with no equity in your pocket. So, if you do have the ability to take advantage of today's lower home prices, again, they're predicted to go up at today's rates. That's not for everybody. We don't want you to be house poor, but if you can qualify and take advantage of today's median sales price before they do rise, many of our lender partners offer a free one-time buy down to refinance that mortgage rate. So, if you went in today at 6.75% or 7% and rates fell down to that 5 or 4% range in 2026, you for no cost to you, you could refinance, and that way you get the best of both worlds. We understand that's not for everybody. Everybody cannot qualify at the 7% market. Just keep that in mind. So, what advice are we giving our sellers? Price to market. We always give this advice, but it's truly true. I know you would think as a seller that with low inventory numbers, you're going to have the upper hand and advantage, and you do with regards to terms and some negotiations. However, buyers are not paying over market value right now. So, price it to market. You will get the best deal. You get a couple of buyers to select from, and you'll be able to make the best selection. If you price it too aggressively and outside of the market conditions, you're going to have less buyers to select from, and you probably are not going to get that purchase price. Also, be patient. Buyers are going through the inventory right now. They do make a couple of trips. They don't go there necessarily on the first time and make that decision. So if you plan on 60 days for your home to sell to that final buyer, then I think you'll set yourself up for success. So on behalf of the entire Graham team, thank you for watching our housing market update. Please contact us if you have any questions about the information we provided here, or if you would like an analysis on a certain neighborhood or community. Please don't forget to share this with your friends and family. We'd appreciate it. We do have some exciting news. So after 20 years of being in the same office, we are actually making a big move. So we are being excited to move into our new office this fall, and we'll keep you abreast, and we would love for you to stop by and say hi. Thank you for watching.